Hello guys, welcome back to Ride On Academia. We are still on our series on the practical application of adjustment, right? We have looked at the comprehensive income statement in our previous video, right? We have treated it practically and we'll be using that same question to solve for the statement of financial position in this video. Now we want to look at our workings again, all right? From our previous video, we have looked at the workings. Now we'll be identifying which items will be going to the balance sheet, all right, which is our statement of financial position. Now, like I said, every item treated in adjustment will also be making a reflection in both the comprehensive income statement and the financial position, right? Now our closing stock will be going there as a current asset. We'll be having our rate that is outstanding. Okay, our outstanding will be going to the balance sheet as a liability, like we said. Now our prepayment will be going there as an asset. All right, we need to know which category will be going there as. Now we have our arrears and outstanding, they are both liabilities, right? Then we have our bad debt. Now this bad debt from the trial balance will not be going to the balance sheet, like I've said before. What is going there is the additional bad debt that was introduced, all right, which is our 1,000 naira. And as you can see, it will be affecting the debtor's value, right? We have adjusted for this bad debt, okay? We had a new debtor's value, and then we adjusted for provision for bad debt, okay? When we had a new provision, we adjusted for this provision, and then we less this from our debtor's value, right, to get this amount. And then we also adjusted the debtor's value because of the discount allowable, right? So this is the net amount that we'll be treating as debtors in our statement of financial position. Now we have provision for bad debt, like we have done. We have seen our previous provision. Now the increase in provision was what we treated in the comprehensive income, right? So what we'll be taking there is our new provision, the one in the additional information, right? We'll be going to our balance sheet, and then our depreciation value, what we take there is our accumulated depreciation, all right? Accumulated. Now we have our annual, which is the first one, right, plus the provision in the trial balance, that is the previous accumulated depreciation. So we'll be adding the previous accumulated depreciation to the annual depreciation to get our current accumulated depreciation, which is this amount, and then we'll be lessening it from the cost of the asset, okay, in our statement of financial position. And then lastly, we have our furniture and fitting. Now we made the depreciation on book value, right? That was how we got this amount. Okay, we got this amount, and then we charge our depreciation to get our annual depreciation, and then to get our accumulated, we'll also be adding the annual depreciation to the previous accumulated depreciation, right, to get the current accumulated depreciation. And then with this, okay, we'll be going to our practical aspects after a short break. Please stay with us. All right, welcome back. As you can see before us is a statement of financial position that have been prepared, right? The first thing we always do is the name of the owner of the enterprise, then the name of the account. We always identify or address our balance sheet as at, okay, as at 31st December or the end of the business year, okay, the end of the business year. Now we have our currency sign, and then if you can see on our currency sign for our non-current assets, we are showing reference to the cost of the asset, accumulated depreciation, that's the current accumulated depreciation, right, and the net book value after we have deducted accumulated depreciation. Now for our freehold, which is a non-current asset, we were giving the cost, right, but we were not giving any information on depreciation. That's why we don't have an accumulated depreciation. Then we have a net book value, right? For our motor vehicle, we have our cost, and then our accumulated depreciation, which we got in our workings, right? We'll be deducting this, and then we'll be getting this value. This is the net book value for the motor vehicle. For our furniture and fitting, similarly, this is our cost, our accumulated depreciation. When we less it, we'll be having the net book value, right? So by the time we sum up all the value of the net book value, we'll be getting our non-current asset, okay, the value of our non-current asset, the net value of our non-current asset. Then we'll look at our current asset. All right, our current asset, the first thing we showed here is our trade receivables. Now we made a lot of adjustment on our debtors, all right? We had to adjust for the bad debt additional bad debt, we had to adjust for provisions for bad debt, and we had to adjust for provisions for discount allowed. So all those adjustments will reduce our debtors value. Okay, this is our expected debtors now. So we'll be having this amount, our cash in hand from our question, our closing stock, all right, and our prepayment, okay, where we prepaid for insurance will be coming here. Now we have our current liabilities, which is our trade payables, our accruals, our outstanding bill. Okay, we have our rates that was outstanding and our lightening in arrears, right? By the time we add all this, we have our total current liability. We less from our total current assets, we get our working capital. All right, then we add the value of our working capital to the value of our net current assets, right? Our net non-current assets. Okay, our net non-current assets, will be adding it to the value of our working capital. Then we'll be having our net asset. Okay, our net asset, which we can also call the capital employed. All right, capital employed. Now we don't have any long-term liability. Okay, that's why we have to stop here and then move to the owner's equity. Like we always say, total asset minus liability should give us capital, right? So in this case, we only have our current liabilities. So total assets minus current liability should give us capital at the same time. So now we have the owner's equity, we have the capital, we have our net profit, and then we'll reduce our drawings. Now, since our working is correct, you see that the figure we got will always be similar. All right, so with this, we've come to the end of the comprehensive income on adjustment. Okay, we have come to the end of adjustments on comprehensive income and financial statements. Don't forget to like our videos if you haven't. Subscribe to our channel. Share this video with as many as you can. We'll see you in our next class. Thank you.